This is Bruce Blythe with Vance Publishing in Chicago. I am at a conference sponsored by FCStone at the Chicago Fed. Just listened to a presentation by Ryan Turner, who's a risk management consultant out of FCStone's Kansas City office. He specializes in the livestock industry and had some interesting things to say about the beef trade. Ryan, you're saying the indications are that we may see a sharp decline in feedlot placements this month, maybe as much as 20%, which is a large drop any way you look at it. Ryan, can you just briefly explain why that's happening, or that may happen?
Yeah, we have seen in the last 3 to 4 months, we have seen increased placements due to the drought in the southwest part of the country. That drought has persisted really and started developing over the last 12 months. The cattle placements into the feed yards in the month of May, for example, in Texas up, I think, 28%, in Oklahoma up 22%, in Kansas up 21%. So in that month alone, you saw a rush of cattle from the drought-inflicted areas because the grass is simply not there. Those animals are coming in well ahead of schedule into the feed yards. That seems to have abated some. Our source in the industry indicates to us that over the course of the first 15 days of June, placements could be down as much as 20%, as you indicated. And so I think the takeaway there is that those cattle moved early because of the drought, and now, not only for June, but I think as you go forward, maybe even through the rest of the year, the available supply of feeder cattle to come into the feedlots is going to be off. It probably won't be off 20% every month from now through the end of the year, but it's going to be off some because the cattle moved early because of the drought. And I think the impact to pricing is that for the course of the next 3 to 4 months, that supply is going to be ample and available, and the supply pipeline is going to be, we'll call it, full. But as we go into later this year and really into next year, we could have some supply side issues as those cattle have already been processed.
Now, we've already seen a pretty steep run-up in beef prices already this year. I mean, you're saying this could only be the beginning if these numbers continue to decline?
Yeah, in early spring, we made some all-time highs in cash cattle market and then also in beef prices. We've come off of those highs actually quite a bit in the last couple of months, and I think that's a reflection of some of these cattle coming in. The supply right now is going to be up a little bit. I guess what I'm saying is when we get to that fourth quarter and we start to have some of those supply side issues, if demand is there, and it's a big if in today's economy, if demand is there, yeah, we could see prices explode higher.
Okay, once again, Ryan Turner. He's a risk management consultant with FCStone out of Kansas City. And I'm Bruce Blythe with Vance Publishing.